All right. Today, I am going to be talking about what offers are being accepted in this crazy market. What do you need to do to get an offer accepted? How do you need to write the contract? How much above ask? What are the contingency periods? What type of loans? All this, I thought of a really cool idea. I've been asked this question time and time again by realtors I'm working with who are getting frustrated. They're putting in offer after offer after offer. They know that I've got a lot of deals going, so they're asking me, hey, Matt, the other agents you're working with or the other offers that you're getting into contract, what are you doing? So you know what I did? This was my $1 million idea. I went back and I'm telling you, I did not discriminate. All I did was print out the last 10 offers that have come through, accepted offers. So deals I have in process right now, real time, April 2021. I didn't cherry pick. I didn't take anything out. Every single deal, just the last 10. I just went through the last 10 in that order. And I went through, scribbled a little bit of notes on it for the purpose of this video, just what type of loan it was, what it was listed at, what it got in contract at, and then a few notes if there's certain addendums in there, waiving the appraisal or an appraisal gap or something like that. So without further ado, I'm just going to go through these deals. I mixed them up a little bit just to make it fun for myself. So I don't know what's coming. I don't know if it's the $1 million deal first, if it's the $330,000 deal. And so without further ado, I'm just going to jump into it just so that you can see some real world stuff. And I think there's a ton of value in this. It's not just people talking about their experiences or one person in one market. I deal all over California. So these deals, I'm not going to get into county or address or anything that's going to expose anybody's personal information because I don't want to do that. But I've got San Diego, San Jose, Sacramento, Placerville, Plymouth, like all over the state of California. And so it's a wide array. And I think it's a good little, 10 deal sample size. So in the interest of time, I'm just going to get right into it. Number one, listed at 370. In contract at 385, 12-day appraisal contingency, 14-day loan contingency, and a 30-day close of escrow. Nothing written in here about the appraisal. So if it appraises light, we'll deal with it. Looks like the only thing really on the counter was those contingency periods, shortening to 12 and 14. And I think I do remember this one. This side called me after I had called them about the offer. And I said, yeah, 12 and 14, we can do it. Let's go. Side note, if you are submitting offers and you're not, one, CCing your lender, or two, having your lender follow up, you're doing yourself and your clients a disservice. Every single one of these, I at least made the attempt. Call, text, leave a voicemail, let them know. I've got the client fully pre-approved. I can close the deal on time. It's not something that's going to fall out. Having your lender reach out to the list side, I think it's been talked about tons of times. It's still not happening because I talk to agents all the time, but you have to be doing that. So that one I remember talking to the agent. Great agent. And I think it bears mentioning, to get offers accepted in a market like this one, you have to write great offers. So every agent that I have in this pile is a good agent in the fact that they put together a good offer. It got accepted in a wild market. So this next one, listed at $899, looks like here's the counter for $970. So what's that, 8% above list price? 70,000 sounds like a lot, but it's really 8%, this high of a purchase price. And buyer to guarantee 20,000 over appraised value. So they're not waiving it altogether. They're just saying if it appraises at 950, they're still willing to pay 970. If it appraises at 960, they're still going to pay 970. Within 20,000, they're good. If not, we renegotiate, right? 17-day loan contingency. On to the next one. This is common right here. This is a tenant buying from their landlord. In this case, I think that they know each other and they're friends, so they worked out a deal. Conventional 20% down, the buyer is. It probably wouldn't matter in this case what they are. That last one was conventional 20% down as well. I don't know if I mentioned that. Conventional 5% down, conventional 20% down on the first two. Conventional 20% down, struck a deal with the landlord, and standard loan contingency periods, appraisal contingency periods, One thing I want to point out in this one, they're working with an agent. Bless these folks. When you do landlord tenant or for sale by owner and there's no agent, I cannot tell you how much more difficult it is than hiring a quality agent. And I won't speak to how those deals are struck, whether it's a flat fee or a percentage or whatever it is. But if you use an agent, everyone's protected. The right forms are used. Everybody's covered. Everybody knows that they're going to get the correct answer from a professional agent who does it all the time. So hire an agent, please. All right. Jumbo, 10% down, listed at $970, in contract at $1,075, as in $1,075,000. This one, no appraisal contingency, 14-day loan contingency, 30-day close. I'm not going to name the specific county or city in California. Very, very competitive, as you can see. $970 to $1,075,000 is about 10% above ask. So that's a 10% down jumbo, 10% above ask. Very well written offer. We got it. All right. For those of you who say that FHA cannot get accepted, this one, FHA, 25-day close, wrote in there that they're willing to pay $5,000 above the appraised value. Don't tell me about the amendatory clause. I know it all, but that's for another video. 17-day low contingency. And yeah. I on some of these, I put down how many days on the market they were. And I'm not sure. Realtors, tell me in the comments whether when I pop onto a site like Redfin, when it says 34 days on market, if I've been in contract for 12, does that mean it went in contract after 22? And now it's a total of 34? Or does that clock stop on Redfin once it goes into contract? I'm guessing the first. I'm guessing this one was on the market about 3 weeks. And another thing, oh, you know what I didn't mention? Listed at $375, in contract at $400. Something to think about as a buyer. List price means starting negotiation price or whatever you want to call it. It doesn't mean value, right? And so the fact that this one's listed at $375, which was pretty close to what it was worth, means it sold at $400. If this same property was listed at $340 and it sold for $400, everyone would be up in arms about, oh my gosh, it got 36 offers, it sold 60,000 above, or whatever that percentage is, right? Like 17% above its list price. It was priced a little bit closer to what it was going to sell for, and in that case, it's like only 25,000 above ask. But that's always just a function of what it gets listed at, right? If it got listed at 410, it would sell below. That's always a funny argument, right? All right. Where was this one? I didn't put where this one was listed at. Oh, this one was listed at $815. Trying to remember this deal. In contract at $900, 10% down conventional. So about 10% above ask. Another fairly hot market in California, and no appraisal contingency, 17-day loan contingency. So as you can see, in the very competitive markets, people are waiving appraisal contingencies and they're offering, 8 to 10% above ask. I guess that's a theme if we're looking for themes. All right, conventional, 30% down, for sale by owner. Now, let me look. 2 out of 10, right? So it's small sample size, but 20%. I'm seeing more and more of these, like 3 a month, right? Just the last 10 that went into contract in the last 3 weeks. I've got 2 for sale by owner, landlord to tenant, which is kind of for sale by owner. People are getting creative because it's hard out there, right? And so this one, conventional, 30% down, for sale by owner, relationship, I think. And so, the way the contract's written is not necessarily of value. Oh, this one, 25% down, conventional, listed at $320, in contract at $320, short closing period, short sale, shit show. This one. Bless us. Bless us. Spadish, 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 spank, whatever. My Albanian wife and her family, that's how they pray. So we're praying for that deal. VA. For those of you who say that VA deals don't get accepted, here's a VA deal. $350,000 ask, $350,000 offer. 30-day close. I wonder, see, I put 55 days on market, but it's been, we got some stuff going on this one. So it's been about 5 weeks since we got into contract. We still got a few more weeks to go. Yeah, maybe it was on the market for 30 days before we got into contract, but VA, it's possible. Sale price, they got into contract at 635, listed at 639. So this one, I think it was on the market for a little bit. This one was on the market for a couple months. This is something that's common as well, which I'll mention since we're talking about it. Condos. For people that are getting priced out of the single family market, I'm seeing more condo sales. Whether it's out of necessity, more than people actually want to live in condos, I'm doing more of them, so I feel like that means that more condo sales are going on, right? And I'm actually seeing buyers that come to me after a couple months of house hunting. Say, hey, we're thinking about buying this condo. How does that affect me? And then we look at, okay, well, you're approved up to 700, but if you have a $300 HOA, you got to keep that purchase price below 640 or whatever the numbers are, right? So another trend just to be aware of. But that's that. All in all, it's a wide variety: VA, FHA, conventional. Obviously, like I pointed out in past videos, the data says it in my market, and this is all of California, not just my market, that it's like 70% conventional, 10% FHA, 5 or 6 VA, 13 or 14% cash. And so, yeah, it's highly weighted conventional, strong conventional buyers that can write no appraisal contingency, $20,000 gap, $30,000 gap, whatever they write. But I thought that'd be a fun exercise just to go over what is getting accepted, how the offers are being written. Apologies if I didn't get into too much detail going through 10 offers. I know this thing was going to run long, and I try to keep these videos no longer than 10 or 12 minutes. So a little bit of insight into what I'm seeing, what kind of offers are being written, and real life examples. I just went through and told you about what it was listed at, what we got in contract at, and a little bit about how the offer was written. Hopefully that was helpful. Any questions at all, Matt, M-A-T-T, at mattthemortgageguy.com. In the description, there's a link if you want to get started on a loan, whether it's with me in California or in another state with a trusted partner. Happy to help. Go into the description, click the link, 5 or 6 questions, and you are on your way. Thanks for watching. Oh, this thing didn't work again. I got to get new batteries. Boom. Still didn't work?